Welcome. In this video, will the Swftcoin rise continue? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. Looking carefully at the chart, we can see that the price action, especially on the short-term timeframes, is quite clearly moving in a downtrend. The price has touched this downtrend line many times, and each time it has seen resistance and downward movement. This type of downtrend formation indicates that the market is still under pressure in the short term and that selling pressure continues. At the same time, however, such structures have the potential to give the market a strong momentum when they break. As of now, the price is quite close to this falling trend line and is experiencing squeezes around this area. Such squeezes are usually a harbinger of a big move. If the price can break through the current trend line to the upside, it will create a significant shift in market psychology. This is because investors start to act more boldly when the trend breaks to the upside and the appetite of buyers increases significantly. As soon as the trend breakout occurs, the wave of selling that has been weighing on the price will weaken and a bullish relief will begin. Following this breakout, a retest move can often be expected, meaning that the price may once again return to the broken trend line and test it as support. If this test is successful, the price may enter a stronger and healthier uptrend. This would be a strong signal that the current downtrend is over, and the market is now preparing to move towards a new uptrend. Breaking downtrends, especially in technical analysis, is considered one of the earliest signals of a trend change. Therefore, the most important thing to follow right now is whether the price can break this falling trend line. It is also important to watch whether the uptrend is supported by higher volumes after the breakout, because volume growth is one of the most critical indicators confirming the reliability and sustainability of the breakout. Therefore, the most logical thing to do right now is to watch the price's movements around this important falling trend line very closely and look for a potential buying opportunity as soon as the breakout occurs. If the price breaks through this trend and is backed by increasing volume, there is a good chance that a new bullish wave will start. The first target of this uptrend could be the horizontal resistance zones that have formed in the past. As it reaches those levels, the bullish excitement in the market may increase. To summarize, there is a clear downtrend in the short term, and the price is currently moving quite close to this trend line. If this critical trend line is crossed on the upside, we could witness the beginning of a new bullish move in the market, so it's worth following this area with great attention. But we need to look not only at the trends but also at other metrics. Stay tuned. Looking at the chart from a broader perspective, one important structure stands out: the flag pattern. This pattern is a strong price structure that is often encountered in technical analysis and usually signals a continuation of the previous trend. In particular, it's clear that after the price action has moved upwards with great momentum, the price will oscillate downwards within a narrow band for a period of time, forming a flag pattern. This type of pattern usually means that after a strong rally, the market takes a short breather, a period of profit-taking and consolidation. At the moment, we can clearly see on the chart that the price has made a big upward breakout and is now experiencing a significant downward but narrowly angled retracement into a flag pattern. This decline was in small and controlled waves, in opposition to the main trend. In technical analysis, such controlled pullbacks usually indicate that selling pressure is limited and the overall momentum of the market wants to continue upwards. There is one particularly important point to note here. Flag patterns are usually characterized by a high-volume rally, followed by a low-volume pullback. This seems to be the case in the current chart. If we analyze the volume analysis, we can notice that the trading volume increases significantly during the uptrend, while the volume decreases significantly along the flag zone. This clearly shows that this pattern meets the criteria of a classic flag pattern. The overall target calculation for flag patterns is quite simple, but can have very powerful implications. The target of the pattern predicts a new bullish distance equal to the length of the previous uptrend before the flag. This means that if the price breaks the flag pattern to the upside, another move of the previous bullish distance is expected. Considering the length of the flag pattern currently formed on the chart, we can say that the price has the potential to reach quite high levels after a possible upside breakout. Of course, at this point it may be risky to open a trade just by looking at the pattern. The price needs to break the upper flag line strongly, preferably supported by increased volume. Also, there is usually a retest after the breakout, meaning that the price may retrace back to the resistance line it broke and confirm it as support. If this test of support is successful, the upside momentum will be further strengthened, and the rise towards the target can continue in a healthier way. To summarize, When we look at the chart from a broad perspective, the clearly formed flag pattern shows us that the overall trend of the price is still upward, and that these declines are actually a consolidation process. If the price manages to break this flag structure upwards in the coming days, and if this breakout is supported by increasing volume, it will have the potential to start a new rally up to the previous bullish distance, which is the classic target of the flag pattern. However, another important detail to remember is that markets are always full of surprises. Therefore, it is important for traders to manage their risks by using stop losses and not to make sudden moves without confirmation of a breakout. If the price breaks the lower boundary of the flag to the downside, the pattern is considered invalid and a different price structure may start to form. This could lead to increased bearish pressure and a test of support levels. All in all, the current picture is quite promising, as long as a breakout meets the technical criteria of the flag pattern. In this scenario, we could witness the price accelerating towards much higher levels in the short, medium, and even long term. Therefore, it is very useful to carefully monitor both the breakout of the pattern and the volume support. We should patiently wait for the breakout of the pattern. When we examine the RSI indicator in detail, a notably distinct downward trend structure stands out. This downward trend, which progresses in strong alignment with the price movements, shows that momentum is weakening and buyers are losing strength. In fact, such descending trends indicate that even minor rebounds in the market remain weak, consistently favoring the sellers. That is, a trend like this in the RSI is a significant sign that no strong momentum can be generated, even during attempted price increases. However, at present, we are at a critical juncture. The RSI has once again touched this long-standing descending trend line. And unlike previous instances where it was rejected, this time it seems to be showing signs of breaking the trend line to the upside. If the RSI manages to break above this descending trend, it would be a technically positive development and could signal a shift in price movement as well. It is important to emphasize here, RSI trendline breaks often precede price action. So, if RSI breaks a downward trend line, this can be an early signal that the price may also end its downtrend and begin to rise. Such RSI breakouts are highly valued in technical analysis because they often produce signals ahead of price action. The current structure on the chart suggests that such a scenario is possible. On the other hand, an RSI trend breakout alone is not a sufficient signal. For confirmation, the RSI must remain above the broken trend line for a while and ideally demonstrate upward momentum. If, after breaking the trend line, RSI quickly falls back below it, this is called a fake breakout and can be misleading. Therefore, it is crucial for the RSI to stabilize after the breakout and continue moving upward. In summary, the descending trend that has formed on the RSI is currently of critical importance. If the RSI breaks above this descending line, it would not only indicate strengthening momentum on the indicator, but also strongly suggest that the price may escape the current downward pressure and gain upward momentum. In such a case, we may be at the beginning of a period where the market's direction could change. That's why it's essential to closely monitor the RSI's behavior at this point. If a positive breakout occurs, a bullish wave may begin, and this rise could be stronger than expected. As a result, whether or not the RSI breaks this existing downward trend will be a significant development that determines not only the short-term, but also the medium-term trend direction. Therefore, in the coming days, it is especially important to pay attention to whether the RSI can stay above this trend line, and also to the volume and speed of the movement following the breakout. If the RSI breaks the downward trend, the price will break the upper region of the formation. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risk correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.